The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour here with Darrell Martin, and just a happy Monday to you. Hope everything's going well for you. And just sort of checking out the markets right now, and we got quite a bit going on, but it's been, overall, it's actually been sort of a flat day. I mean, we obviously had a big run-up overnight, but as far as the day-to-day, not a whole lot moving real fast. And let's go ahead and let's take a look at just sort of where the markets are sitting at. And what I'd like to do is, start the show off with that to sort of, give you an idea of where the market is. So when you're looking at your trading decisions, you know what you want to do next. And one of the things we also want to do, I want to remind you, as far as the fundamental side, before we get started on that, is that Britain does have a bank holiday today, the summer day holiday. And so, of course, that's closed down the FTSE, and it's also going to lower liquidity, which does result in a lighter trading session. So just always make sure you're aware of those bank holidays, and like I said, Germany has one, not Germany, Britain has one today. So that has closed them down quite a bit. And then we have the FOMC member came on, decided to do a little speech earlier, and he came on right there at, 11:15 Central, 12:15. Let's see here, 12:04. So yeah, we got 11:15. So he came on just a little bit a while ago. And didn't have I'd say a dramatic impact. I mean, he started talking, market started falling. But, everybody is trying to figure out what's going to happen next with the QE3. And so, my expectation is that there is not going to be a QE3. So not for at least this announcement. I don't think there's enough numbers warranted to it. Well, the big telltale factor on that is really going to be coming up here in a couple weeks. On September 7th, when the unemployment numbers come out. I think that's going to have a major impact on the employment change, or the unemployment rate, and the non-farm employment change. And so when those numbers come out, and I expect the non-farm employment change to be about the same amount, 163,000, that it was last time, and that would give them basically the excuse to not do it. It also gives them the ability to sort of set it up. I know last time that Bernanke announced QE2, what we had going on was he sort of used that as a layup, as a setup for the QE2 announcement. He used the Jackson Hole Conference on his speech. He's going to be making that speech this Friday. I don't think he's going to use it as a setup on this one. Just there's been too much mixed data out of the Fed, and there's been too much positive data. The Fed minutes really, even though they did, initially, boost some things, when they came back out and they're like, yeah, those are really dated because a lot of data has happened, since those Fed minutes actually took place. And yes, do they have it on the table? Yes. Are they considering it? Yeah, it's definitely a consideration if warranted, if needed. But in a rising market with improving employment and without dramatic changes in inflation, there's not really a justification for doing it. However, 8 weeks later, in October, he definitely could be announcing a QE, or 8 weeks after that in December, there's a high probability of a QE based on just how the numbers go for the rest of the year. But you really got to be watching those employment numbers, those inflation numbers. Those are going to be the number one things. And I guess one more thing to go with the number one things is just Europe. So, we got September 12th. The German Constitutional Court is going to decide on the constitutionality. And literally what they're going to have to do is, if they agree to this European stability mechanism, okay, they're actually going to have to change the German constitution. And they won't be the only ones. There'll be some other changes that can take place, but they're going to have to change their constitution. And they want to get everybody under the same political and fiscal, basically guidelines, and reshape, and sounds pretty extreme, but it's accurate. They want to reshape Europe in Germany's image. But it's really interesting when you go and you look at the real numbers. Italy, if you take their private and public debt, actually looks better than Germany's, but that's not really one that's commonly discussed. And so, whether or not that's the best idea or not, probably not. And, they're sort of known for trying to make Europe in their image, and with their fiscal policy. This isn't the first euro. This is the third round of euro. And, there was one obviously back in the 40s, back in the 30s, I'm sorry. Back in the 30s, there was a round, and then now there's this one. And it's fallen apart, hadn't been put together well, and nobody really wants to be liable for everybody else's debt. And so for them to take on that, debt, they'd have to change their constitution, because right now, several things would have to take place, and that's one of the policies is the German, basically Parliament has passed that they have control of, the budget. They basically have to have a balanced budget. Not necessarily a bad idea, okay? But with that means that everybody else would have to have a balanced budget, and they have to submit everybody else to their parliamentary and, judicial proceedings and how they handle things in order for the ESM to even have a chance of surviving. There's also the Greek exit, which I think is a high probability. And they're trying to talk that down, but they basically said, no more money, and right now, no more time, and, we'll reconsider after the Troika convenes, which will be late September. And, we'll see if, we think it's justified at that point. Basically, if you're falling apart, they think it'll make it better. If it's falling apart and they think, hey, getting rid of Greece will at least give us, a scapegoat, then they may kick them out. Another thing's been floating around, which is ridiculous, is a temporary exit. Like Greece leaves the euro, gets its fiscal house in order, and then can reapply to come back and be part of the euro. But right now, all the estimates show that by 2020, Greece is going to be at its current rates with all these cuts that it's been doing. It's going to be at 120% GDP. So to apply to be in the euro going forward, they're really going to have to be at 60% GDP or better, and 60% other GDP. And so it's basically just fluff to make it feel better. Like we're gonna have them leave, but then we'll have them come back. So just don't be fooled by all the rhetoric that's out there, and definitely keep your eye on the ball. So with a lot of things going on, they don't have to approve this, and either they're going to say okay, or they're going to say we're going to do an injunction and extend the injunction, meaning like we're going to continue not letting people do it. And they actually won't make a final decision until 2013. Is what the court has said so far. But this decision is very, very key, because based on it, if they give the go-ahead, okay, if they say go ahead and we give the go-ahead on the ESM, they can't override it. They can't change it later, okay? So the ESM puts it in place, and literally the German court no longer has power to say no later, and they give up that right. And the probability of, exactly. Germany is definitely not near as balanced as it pretends. And, and the German court does not want to give up its control, and it will be giving up control on that fiscal policy and basically the obligations of Germans to pay for other, debt. And Germany is not the all and all. They have some definite good numbers that come out, but like I said, their bonds, if you take the public and private, are worse than Italy's. So not something that's talked about real often. But anyway, so, just wanted to bring those things to your mind so you're aware of them. And, everybody's going to be watching for every little Fed funds announcement. They're going to be paying attention a lot to Bernanke. With the really low volume that we're going to have, we got to experience that really through the end of Labor Day, and, maybe even a day or two past that. And then it'll start picking back up. And, in that second week there, basically first week, second week of over the weekend, we'll see around September 6th or 7th. We'll see Europe come out with some announcements. They're not going to have a whole lot to say because they still have to wait on the German Supreme Court to make a ruling. So these expectations of some big, wonderful thing can't happen until that happens. And so, there's really nothing they're going to be able to say. There will be expectations. There'll be pump up about QE. But on the low volume, the market could steadily, rise going into that. But the market's really already priced in QE. That's what the whole, we've had some good... economic things. We've had a lot of bad economic things. Even the good ones are not bad. They're just better than, even the good ones are bad. They're just not as bad as the previous on some areas. And the other area that, they'll be looking at is just to see, how does Europe respond? Because, they pushed that Fed funds rate back 1 day. And if you go all the way back to 2009, literally every Fed funds rate has been on a Tuesday or Wednesday, and they bump the Fed funds rate announcement. Even if they don't decide to do QE3, he can always say things and, prop things and, do whatever to make everybody excited. So basically as a, hey, stopgap, if everything starts crashing, then he can come out with that announcement. Or if it's, heading in the wrong direction, he can come out with that announcement. Bernanke can on the 13th. So he basically gave himself a 1 day window to let, Europe respond first. And, just the games that they're playing. So it's not really driven by the true fundamentals. It's driven by just the I guess you could say the fundamentals of countries, not companies. And that's one of the dangerous things about trading just individual stocks right now. You can have the best stock in the world, but if Europe blows up, it's going to go down along with everything else because all the economy is expected to drop with it. And so you want, that's why ETFs, futures that track indexes, things like that have a definite, great thing. The stocks, of course, can be really volatile, which can be great. But as far as, like I said, best companies in the world, if you have a crashing economy, you're going to go down with it. And, Apple, of course, it won its big lawsuit against Samsung, $1 billion handed over to it. That helped Apple shoot up overnight, and it helped Samsung on the late trading session. But, at the end of the day, I'll put this flash in there, Apple still has a lot more to do. You can see the late after-hours trading session where it shot up a couple percent there. And, Samsung dropped some, but they still have to do two other things. $1 billion really isn't a big deal to Apple, and $1 billion really isn't a big deal to Samsung. Samsung can write a check, okay? Literally, it's cash. Here you go. They got over $7 billion just in the bank. And the big issue is getting all their current phones off the market. So can they actually get that order approved to pull all these Galaxy phones and everything out of stores and no longer let them sell it? And the other thing that's going to be really interesting is what happens to the existing phones. Of course, nobody's going to take the phones, but they could push a software update that disables all those patents. And so that'll be an interesting uproar. And it's actually a very good time, because if that happens and it messes up the Androids, and Microsoft is now getting real big on pushing its phones with its new Windows 8 platform, and as all that stuff starts coming out up in the holiday season, if you get Android severely weakened, then that actually could position Microsoft to actually finally be successful in launching some phones. And Google's already scared of the results here, and they've already had Motorola that they bought file suits against Apple, and of course they know that they're their number one target now. Apple's going to go after them next, and because Google of course owns the Droid, software. So I don't know, just a lot of interesting things happening. And then September 12th, not only do you have the big announcement, but Apple, last time I checked, was scheduled to actually make its announcement about all of its new stuff. 4G iPhone, larger screen, smaller tablet to be more like the Kindle. And their Apple TV, which really, Xbox has a TV, so Microsoft already has that covered. And I'm not just a proponent major of either one, but if you think about it, like Microsoft has the Xbox, which puts it in the living room already. It basically just has to get into the phone market, which if the droids get killed could actually help it a lot. And you can also go over and look at the fact that obviously they dominate the PC market, and then you go in and you just look at how they put everything together and how to work as one cohesive unit. So Microsoft may be coming back. We'll see. They're still going to have to, of course, deal with Google as it gets bigger and bigger, and as Honeycomb gets launched out and starts becoming the operating system that a lot of people may choose, just because it's going to be faster than pretty much all the other ones. And anyway, so what I wanted to do is I want to do a market wrap for you and just look at where all the positions are at, and we're going to do that right when we come back. And stay right there. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour here with Darrell Martin. And just going over several things in the market, talking about the fundamentals, sort of wrapping that up. I want to go ahead and we'll finish up the wrap-up on the fundamentals for the week real quick and get that done. And what we got going on this week, obviously, like I said, Britain is having a holiday today, so that's leading to just even more lower trading volume on top of the regular summertime trading volume. And we have, FOMC member came out and had a little speech, and not too big of an impact though. And then going down and looking at what's on the books for tomorrow. So we're going to be going in, and the big announcement here in the U.S. is going to be the Consumer Confidence Report. It's going to be the Conference Board Inc.'s Consumer Confidence Report. And you can always go over to conference-board.org and get the latest release when that comes out, or whatever news service you want to use. And so it's basically just a big area. But the Conference Board leading economic index for the Euro area remains unchanged in July. So we'll see how that comes together. But it really is just how they have a lot of different indicators they're looking at. And what they do is they look at 5,000 households. They ask them to respond to different conditions about the market, and put that together. So the forecast is 65.8. That's a little bit lower than it was last time. It actually came in at 65.9, but the number actually came in much better than expected at the end of July. So we'll see how it comes out this month. And then rolling on over and looking at Wednesday. So we're going to have right here in the United States, we'll be having the preliminary GDP. So that's going to be coming out. That obviously ought to have a pretty big impact. That's going to be at 7:30 Central, 8:30 Eastern. And right after that, 9 o'clock Central, 10 o'clock Eastern, we're going to have the pending home sales. So basically homes that are under contract that they're working to close them out. And so basically the number that's before they're counted as closed is where that comes in. So that's a big leading indicator right there. And that's going to be the big announcement on Wednesday. If we roll on over and check out Thursday and see what's coming up, we're going to have our weekly unemployment claims. That's going to come out at 7:30 Central, 8:30 Eastern Time. And another big thing that's going to be happening overnight on Thursday is the Italian 10-year bond auction is going to be taking place. So, of course, good or bad on that could have a definite impact. And then also the German unemployment change will be coming out around 3 a.m. I want to say it's 2:55 a.m. Central, 3:55 a.m. Eastern Time for German unemployment change. So on Thursday, you got German unemployment, you got the Italian 10-year bond, and you got the U.S. Unemployment claims coming out. And there'll be a slew of other things coming out, but those are going to be the big numbers that are really going to have an impact on the market. And then scrolling on over to Friday, we'll be starting off heavy there first with we'll have the unemployment rate just in the Europe as a whole. So the total workforce that is employed or unemployed, and that's going to come out at 4 a.m. Central, 5 a.m. Eastern Time. So you'll be waking up to that, and or maybe you'll be awake to that, depending upon what hours you trade. And then going on over. Canada is going to have its GDP coming out at 7:30 on Friday morning. And after that comes out, then what we're going to be doing is looking at a couple other reports. We're going to have, Chicago PMI revised, University of Michigan Consumer Sentiment Report. Those have very moderate impacts. The big impact, the biggest announcement really this week is going to be just every little key word that Chairman Bernanke has to say. So whatever he says, again, that's 9 a.m. Central, 10 o'clock Eastern Time. And you want to make sure you have that one on your calendars because you need to be aware, and that'll make it not a regular flat Friday. So the market will be moving one direction or another based on what they can, try to see through the crystal ball of what he says. Again, I don't expect him to say a whole lot besides, hey, these numbers have improved and Europe is getting worse, and on down the list. So and Congress needs to act. Just normal things. So I think we're going to hear a lot of the same old stuff. And then we got the Jackson Hole Symposium, of course, happening on Thursday and Friday and Saturday. And that'll be going on all day, and there'll be different key financial people coming out and making statements. And so those just individual statements that could happen anytime on Thursday, Friday are going to have an impact on the market. And, of course, whatever said Saturday, we'll be seeing on Sunday when the market opens up over there on the futures side. So that's sort of just a wrap on the fundamental announcements coming up this week. And, going over and just sort of looking at where is the market right now and what should we be looking for as far as, market movement. Let me pull that up for you, and I'll get you some numbers and everything else. So right now we got the S&P basically flat. The S&P futures up 3.5 points. The NASDAQ futures up 13.5, and the Russell is up 3.8 with the Dow lagging down 6 points. We got natural gas up down negative 0.044, and we got crude oil is down $1.08. So it's moving today along with natural gas. So natural gas at 1.67%. And we got obviously over here we got the 30-year Treasury bonds rising on up. And then if we look on over at silver, it's actually moving up quite a bit too. It's up 1.4%, up 42 cents on the day. And we got gold is not moving that much. It's only up 2.9 from Friday's close, and copper is down barely anything. It's basically flat on the day. It's down 0.01. So hold on right there, folks, and we'll wrap up with some ags and some currencies for you on where they're at, and we'll look at some deviation levels.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And we wrapped up the fundamentals, and we're going through and looking at the market activity for the day. And, talking about a couple of the big gainers, and then we're going to go over and just wrap out here with the currencies and some ags. And it looks like corn is down $2, so not a big, massive move for corn. Soybeans is down quite a bit, 8.25, so it continues its decline. And we go over here and check that out real quick, and I'll show you sort of what's going on. But if you can look at it, I mean, it made the big move down on Thursday. Friday, we were catching that. And then, sort of basically closed out right around here. And, now we're not too far off that price level. So it is continuing the drop off those highs. And going back to the daily bars, we can sort of see, the highest price there, $8.49, and it's just hanging out between the levels. And going over and looking at soybeans, like I said, it's also been doing some retracement action today, and just sort of bouncing right now, back and forth. It did have a big spike move earlier this morning, but came in back off of that, and you can see the sort of it shot up just really early morning overnight, and then just gave it all back. And actually now down in negative territory. So just a monster drop, and about 42 points there off the highs on soybeans. So, something that we definitely, we love trading the ag, but you got to be careful of those ags because, man, they can move fast, not being as liquid as many of the other markets. And, so one of the things that I'd always teach people is an exchange that you may or may not know about, depending upon how long you've been listening to the show. But it's called Nadex. And Nadex is the North American Derivatives Exchange. It's based out of Chicago. It's registered with the CFTC. and it is the only regulated, only exchange period to offer binaries. There are other places that have binaries, but not all binaries are the same. And I mean, like, it's a night and day difference. You know, one of the shows coming up this week, what we'll do is I'll go through and I'll actually show you what of those night and day differences are. But it is just night and day compared to what a lot of the other companies out there that are over the counter. You know, like 25 grand, they can set up their own little binary company over in, you know, South Africa or Virgin Islands, wherever they want to set it up. So this is actually a fully, you know, registered exchange, and, you know, they've done their vetting with them. They're owned by IG Markets, a huge company, and they also are the only place in the world you can actually trade box spreads. They also call them bull spreads, but they're bullish if you buy them, they're bearish if you sell them. So I just call them bull bear box spreads. And if you go in and just to get an account, you just click create account. You can sign up in about 15 seconds with a test demo account here. Just click open a demo account. You put in your username, you put in your first name, last name, phone number, and email address, and you'll have access right away. Basically, they'll send you an email with a password, and you just go up here and you click on log in. And then under create account, to get a live account, you can actually fund an account with $100 and start trading. And there are a lot of trades for less than $100. And so you can hop in there and you can actually hop in and start checking it out and seeing how it acts live. Of course, I always recommend that, one, get a live account so you can see the real thing. Okay, it's only $100 to fund it. But the demo account is going to be almost exactly the same, but it is a demo account, and they give you $25,000 of funding money. And even though it's pulling money from the live market, if trades are being filled inside the demo environment and people are doing just weird, stupid things that can mess with the volume of the bid-ask spreads or whatever. So that's why I really like using the live account, even if you have a demo account, just to see how it works on the live side. But the demo is good for you to learn the mechanics of the strategy, how the strategies work. So that way you can put everything together. And it literally only takes a few minutes to sign up for a live account. And so definitely recommend checking that out so you can follow along in a lot of the trades that we like to, you know, pull up and do over here. And if you have any questions about Nadex, if you have any questions about the market, about, you know, diagnostic trading fundamentals, seasonals, technicals, deviations, definitely give me a call. You can reach me and ask questions live right here, 877-927-6648. Again, that's 877-927-6648. If you're outside the U.S., you can give me a call at 727-445-1044. And the one other thing we want to look at is we're going to start looking at some of the just deviation levels for the day. Silver went up and literally just barely broke that deviation level. Its one standard deviation level was right up at 31.31. And let's see, the high on this on the current silver contract, it actually came a little bit below that, 31.22. So it's depending upon you know, what formula you're using there. I like to use implied deviations, and you know, right around $31 is where it hit that level, and it just started. It basically hit it, went a little bit above it, and dropped. So that's really what's happening right now. Silver's moving down off of that deviation level, and not a big surprise. We didn't expect that with our deviations. And going over, and we'll just sort of scroll down and check out the markets on the different levels and what we're looking for here. And so on, you know, the S&P 500, it's really just flat. I mean, even from, you know, the previous day's close, we don't have this massive movement going on. And so, you know, with that being the case, we just, you know, want to keep that in mind that, you know, it's a flat day right now. We also have, you know, the London exchange, you know, or, you know, London's closed with the FTSE being closed, and it'll resume, you know, tonight. But that's led to this really a flat market, and that's going to have an impact really on all the major indexes. And you can see the same thing right here. You know, I mean, we have deviation levels built in that are, you know, pretty high, but the chance of them hitting them before the close is pretty low. And again, that's the holiday impact, and then just the pre-September impact. All the traders are going to start coming back in full force after this Labor Day holiday. So be ready. So it's going to start getting really fun again. And it's been good, all right, but it's I mean, it's just going to change. Let's see here. Let me pull up first. Go ahead and pull up the Dow. Same thing, pretty flat. And so we don't really have a lot of big expectations over there. Oil had a massive drop this morning, and I mean, just look at that thing. I mean, it literally made almost a $3,000, just about a $3,000, actually a $3,000 move in one oil contract. So $3 just falling. I mean, just down. And so definitely, if you caught that, congrats. And I mean, it just, like I said, it flew. And it's depending upon, you know, where you were at, and you know, can be some good trades for you. But also, you know, one of the really important things is to highlight how you need to make sure that you have a trading plan in place. Okay, so you need to know what your goals are, what your take profit levels are, and we were right near the standard deviation level from yesterday's close. And I mean, it's amazing just how accurate. I mean, not the standard, but the implied deviation levels. So standard deviations are ATR based on yesterday, and not really that useful. But implied deviations, where it's using implied volatility of the underlying market, and the option pricing for future expectation of move, are pretty spot on. And looking over at the sweet crude futures, it looks like the low was a 94.31. We hit 94.41 and just flattened out. So basically we went one standard deviation down. And if we even look at this pop up overnight here, from the close on Friday there, we look at move up to 97.98, and we got up to about 97.74, so within just 20 cents of that move. And that's a pretty decent move required, because one deviation level right now on oil is a little higher than normal. It's a $1.85. So they definitely expected some movement, and I mean, look at that. It encapsulated the range for the day. Not saying that it's range bound. All right, just there always is a range of expectation for the day's movement, and so we stayed right within those areas. And being right within those areas, I mean, you could look at a possible long or short if you could find a good spread to go long on, or a binary to go long on, if you wanted to sort of play this bounce off of here. But I mean, it's definitely, that's a big move, and I'd be very cautious about going long on oil unless you're using something that had a limited risk nature to it, like a Nadex spread. And so if we went over and we checked out the Nadex crude oil spreads, then if you're inside your demo platform, it's pretty simple here. Let me just pull out one window instead of having 20, and make it a little easier there. And what you're going to do is hit refresh. Make sure you have the most current stuff. Okay, so refresh button is right here. Then go to commodities and bull spreads. And then you'll be able to look up several things. But one of them is you'll be able to see the commodities that are currently open. Okay, they have more products than this, but these are the ones that are open right now because they sort of close basically with the floor. And so that's like why gold and silver are closed, because the floor is closed. But you go on over and you look at crude oil, and then you can pick your time of expiration. And there's also what's called a master spread. Okay, a master spread is going to be your widest spread. So like 1,000 points wide. This is 150, 300, 500. So master spread, widest spread. And if you ever don't remember, just click all master spreads. It'll show you all of them. And once you do that, then you can choose. Now, the master spread is only going to have one spread. Okay? You just click on the actual thing right there, so daily, and it'll pop up in your markets tab. You can hide that or open it right here at the top. And so once you look at that, you got the crude oil there, 92, 102 to 230. And that shows you the master spread. Then you can go over and you can look, is that anywhere close? No, that's nowhere close. Therefore, that's probably not the trade I want to do outright by itself. What I really want to find is I want to find a spread. If I want to buy, I want to find one close that has a floor, okay, close to where the market is. If I want to sell, I want to find that has a ceiling close to where the market is. So with the market being right now about, pretty close to $95, we go over here and we can start looking at them. And the longest ones to expiration are going to be your next biggest spreads, and they'll also be wider. So more profit potential, all right? And not necessarily more risk. So it just depends upon where the floor and ceiling's at. And we've got one at 94.50 right here, so that's pretty close. We may want to wait till a pullback down maybe before we bought into that. But 94.50 would definitely be a long potential reversal play right here. And you can go in there, and if you look at the risk reward on that, it's a $47 risk for a $453 reward potential. And now that reward potential is meaning that it's all the way up to 99.50. Okay, so realistically, reward potential, no. All right, probably not. That literally would be a $5 move right now, before 230. So I mean that's not necessarily realistic. So what we want to look at is what is our potential move on the upside, and so that really is going to be about back to break even from close of yesterday. As far as we should expect it to move back, because we moved down about a standard deviation, so about one standard deviation would put us right back up here at around $96. So you got about $1.50, which would be $150 profit potential on a $47 risk trade. So that's one option for you. Again, I would definitely be waiting for it to get closer and move down, unless you just want to hop in on it. But it is 50 cents away from the market right now. So being at $95 and $94.50 being the actual risk on the trade. I mean, it's very close to where the market is. So I mean, you can trade it almost on par with the market without any premium, but you still have that 50 cent, $50 risk built in. So let's see if there is a better one. And so we're going to go down to the 8 to 230. They expire at the same time, but they're a little narrower. And these come out at different times. So these come out like at 6 o'clock at night. So they're wider. That's why these are narrow. They have less time to expiration. All right. So here we got a 95.50. And that's really not any better. I'd more like a 95, so not really impressed with anything I see right there. And then we got a 12-2. And on the 12-2, we do see a 94.25. So that was a little bit closer, but I have 30 minutes less. I only have until 2 o'clock Eastern, 1 o'clock Central. So I have literally about 15 minutes to make money on that trade. And so, not necessarily, excited about that. I do like this $95 one if I was going to place a trade. And I would have done it earlier. This would have been the place to do it, because $95 would be very close to where the market's at. And $13 risk, $137 potential reward. And that's a move up to 96.50, which is definitely, within our range of probability there. It's already traded at that level today. And so if we expect about a buck move up, we could, be looking at about a $100 profit if we moved up from 95 to 96 on a $13 risk. And the way that the box spreads work is they literally form a box. And it's not a yes-no statement like the binaries are. It's literally it's like buying oil. Okay, it's like selling oil. I mean, it's that, as far as how you're trading it. And so you can go in and you can literally draw on here, and whatever trading platform you like to use. And so if I go here to 95 and I want to draw a rectangle, there we go. I don't think I have the rectangle chosen, but let me pull up the rectangle drawing tool. There we go, and I do have it chosen. Okay. So we got $95, and there we go. Pull it on up, all the way up to 96.50. Okay, so up to 96.50 right there. Put that on. That's basically our profit potential, and that'll go through to 230. Okay, that's when that'll expire. So what happens if oil expires? Where I bought the spread. If I buy the spread for say 95, 10 or whatever, then if let's say oil expires at 95.10, then I get all of my risk capital back. Okay. If it expires higher, then that would change it. But let's say, like I said, let's just put it in there, and let's say we bought it at 95.10. Okay, so $10 risk, $140 potential reward. If it expires at 95.10, I get my $10 back. If it expires at 95.09, I get 9 of my $10 back. Okay, so it's literally at 95.08, I will get 8 of my $10 back that I put up to place the trade, and that's all I placed. I'm trading oil futures with $10. Okay, I mean that's awesome, and you go in there, I mean, not only is that my margin, that's also my risk. And if I wanted to equalize the trade out, I would do 10 contracts. So why? Well, every penny on an oil future contract, now you could also do 5 for a mini, but looking at the full oil futures contract, every penny equals $10 on a futures contract. So if I wanted to make this just like trading a oil future as far as a point-for-point move in the spread versus the underlying there, then I would do 10 oil spreads. And 10 oil spreads would give me, since every tick on Nadex, this is a really important thing, really simple thing to remember, is every tick, all right, is worth $1. It doesn't matter what you're trading, Euro yen, pound yen, DAX, S&P, oil, whatever it is, every tick's $1. And they all tick in increments of 1. So like 0.03, 0.04, 0.05, okay? Or the S&P is even 0.1, 0.2, 0.3. And so they all tick in increments of 1. The last digit is what it ticks in, and that is always worth $1. So by doing 10 of them, I only risk $100 on the trade, and I have the potential to make $1,400. And when we think about 1,000, that or so is realistic, realistic possibility. And so a great risk reward setup, low margin requirement. That would be like going in on oil and having a 10-cent stop loss. So if you think a 10-cent stop loss is nothing on oil, the thing moved up and down several dollars today. So we were talking like 10 cents. So much safer, and you don't get stopped out of your trade. I'll talk about that when we come back right after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the Diagnostic Trading Hour. And that oil trade looks like it picked on up. It spiked down and went right back up right after that. And as you can see, it's now up at 95.31, again, coming off those lows. And not only just lows, but lows of the implied deviation. And so I'm going over and looking at just a few other markets and sort of seeing anything that is really close. Most stuff is just not moving a whole lot today. So like I said, we did have silver move and sort of dropping down off those highs. And we also, obviously we had oil move way down and sort of shooting on back up there. Gold has been pretty flat overall. So just sort of, waiting to see what's going to happen next. And it's going to be real volatile here in the next couple of weeks. Copper had a decent little move going on in it, and we can pull that up and pull it out. And it basically had this massive drop right here, and before it leveled off. And move on copper looks like it's down to about 330, so it really hadn't even moved to full deviation, but of expectation. So there's a lot of expectation of moved. there's a lot of expectation built in of moving into the market right now in the options. And so just be very, very aware of that today may be a quiet day, but tomorrow probably will not be. And everybody's just really waiting and seeing. So, the whole waiting on Bernanke, that's going to cause quietness. The lack of volume is going to cause quietness. But any announcement at any time could cause a major eruption on any one of these markets. And looking over at just a couple other ones for you. We'll check out, looking over at some of the currencies and some of the big movers on the day. Also, we had natural gas. That's actually a great one to check out. It has just been falling like crazy. And so pulling natural gas up, just look at this thing. You want to talk about a trend, right? So there's a trend for you. And it's been moving, way down. And it's like natural gas on its total numbers there is down for the day 2%. So really pulling back quite a bit. And so natural gas definitely something to check out. And it is approaching right now its deviation level, which will be a little bit lower, but only 20 cents away. So 26.20 would actually be the one standard deviation level on natural gas. And we're literally only 20 cents or so away from that level of natural gas hitting that. And so it's sort of nice whenever you have the implied I keep saying standard, but implied deviation levels, because it lets you know what to expect, and so you don't hop in real late to a moving trend. Like right now, you're sort of going for 20 cents if you're going in. And it may be 5-10 cents above that, 5-10 below it, but you're not expecting just a massive move down from here. And so that's, you just want to be careful hopping in on those trades and joining in and being late to the party. Sort of like if you didn't look at where the deviation levels were, you may have gotten late instead of looking to go long on that. And if we go on back over and look at natural gas, we can sort of see what trades, again, they're closing out here pretty soon, here in just the next half hour. And we can look at, okay, we got over at 26.41. So do we see anything even close to that? That would be really a good setup for us. And we do see the 2600. That's going to put us still at quite a bit of risk, $69 risk on, per contract. We want 10 contracts on that trade. So that's a pretty large risk on that trade. And you may just not be willing to join in on it at this moment. Other options you have is you can go over and you can check out the binaries. And we'll be talking about those more later this week, going into a lot more details on binaries. But if we go over and look at, like, say, copper, and you can look at the weeklies, or you can go down to natural gas, and, like what we're looking at right now, and I usually look at the dailies. And so on the dailies, we're looking over there at 26.41. As far as bounce back up, how far could we expect it to move? Probably not too far, because we don't have too long, right? So here's a risk right here, $17 risk. So if you did want to go long, and this is saying, hey, that it's going to get back up to 26.80. So back up to this level or higher. If you got to that level, you'd actually be able to cash out at least $45 before it expired. Okay, so a $17.50 risk, and you're looking at about a $25 reward on that if it gets back up there before 2:30. But just want to get your mind flowing, some juices, creative juices flowing, and we're going to hop in and we're going to really start digging into these binaries over the next couple of weeks and showing you how they work, and it's making sure you understand and have that mastery of the spreads and your correct expectations on movement for your profit-taking goals and potential reversal plays. You have a great day, and I will see you tomorrow right here, 12 to 1 Central, 1 to 2 Eastern Time.